Bismillahirrahmanirrahim. Dear students, today we will be discussing certain modes of Islamic banking. So far, we have discussed the aspects of Islamic banking, what is Islamic banking, what is the difference between Islamic banking and conventional banking, and evaluation of Islamic banking in Pakistan. Now we will be discussing different modes of financing which can be used in the Islamic banking, which will actually try to minimize the consequences or minimize the riba related transaction. So we'll be discussing different modes of financing which are being practiced in Pakistan. Mostly the Islamic banking initiative was taken by Mizan Bank, and we have a very comprehensive book on Islamic banking by Imran Taqi Usmani, and they have done a valuable work regarding different modes of financing which can be used to avoid riba based transaction in banking. Main instruments of Islamic finance. There are different instruments of Islamic finance which are being practiced in Pakistan, and mostly there are certain banks, specific Islamic bank, but now Islamic banking concept has evolved and people are appreciating this initiative. So many conventional banks have started their branches of Islamic finance, which are offering Islamic modes of financing. So there are many instruments which are used in Islamic banking, like loans financed by lending. These are the loans which were actually being given to different people or different students, many other people who can use these financing. So first of all, interest-free loans with service charges. These are the loans on which there would be interest would not be charged, but obviously the bank will charge their service fee for facilitating and providing a loan to their customer. A second one is your Qarze Hasana. Qarze Hasana is also a type of loan, and this loan is actually being given to students who are well have skilled and who have the capability of performing well in their academia, but they have lack of funds and they have lack of financing, due to which they cannot complete their studies. So in that case, the bank will do is they'll get the guarantee by of their parents, and give them this Qarze Hasana, and once they have completed their study, so they can pay back this loan in easy installments. And what are the terms and conditions of the loan which are being done between the bank and the lender who is actually taking these finance, but it is actually interest free loan. It's actually a Qarze Hasana. Then trade related modes of financing. The second the modes of finance is the a trade related mode of financing. The first one is markup or a biomodule. What is a biomodule? Actually, it is defined as a contract between a buyer and seller, under which the seller sells certain specific goods permissible under Islamic Sharia and law of the land to the buyer at an agreed fixed price, payable at fixed future date, in lump sum or within a fixed period by a fixed installment. This is that kind of loan which can be returned by installments or in after a certain time period, but the interest is obviously not involved in this. Another trade related mode of financing is leasing. Actually, leasing is being used in conventional banking, and when we are using this leasing in Islamic banking, it is termed as ijara, and it's actually an Arabic term which means providing services, goods temporary for wage. The ijara contract as involves providing goods and services on a lease or on rental basis. In ijara contract, a person or party is given the right to use the object for a period of time. The owner retains the ownership of the asset. The ijara contract or the Islamic leasing contract is similar to conventional lease, in which the owner rents or leases the property or goods to a leasee for a specified period, number of period, for a fee. For example, the leasee is responsible for normal maintenance, and the lesser is responsible for major maintenance, just as with many conventional lease contracts. But there are certain features of ijara which differentiate it from the conventional lease. Like the lessor must own the asset for the fuller lease period. If the lessee defaults on payment or delays payment, the lessor doesn't charge compound interest. The leased asset used is specified in the contract, and there are many other differences between this ijara and the conventional lease. Like the installments would never start once the leaser had the property in his hand, but in case of conventional lease, you can start paying your interest and installments before you will get the right to use or get the hold of the asset. Then another mode is hire purchase. Actually, hire purchase agreement is the agreement between two parties where the owner allows the usage of good to a person, the hirer, to hire goods from him for a period of time by paying installments. The hirer has an option to buy the goods at the end of the agreement if all the installment are being paid. So it is a kind of installment based transactions. And the fourth modes of trade related mode of financing is istisna. Istisna means asking someone to construct, build, or manufacture an asset. In Islamic finance, when we talk about istisna, it is actually generally a long term contract whereby a party undertakes to manufacture, build, or construct asset with an obligation from the manufacturer or producer to deliver them to the customer upon completion. In practice, the key advantage of an istisna contract is that it can provide flexibility to the customer, where payment can be made installment linked to the project or completion, or at the delivery or after project completion. In contrast to istisna, there are another mode which is called as basalam. Actually, for salam contract, the payment has to be made in full in advance. Now there are other modes of financial for Islamic finance. These are investment modes of financing. First of all is musharika. Musharika is actually a type of partnership in which both the parties or both or two or more parties come up with their investment, and all the people who all the partners who have investment in the business have right to participate in the regular operation of the business, management of all the activities of the business, and the profit is being predetermined, that the ratio of the profit is being predetermined, that how much profit is being shared by each participant, whether there are certain partners who have investment made investment, but they are not actively participating in the business, or there are certain people who are have made investment and they are actually taking part in many other activities as well. So all the profits regarding many activities and ratios is determined before the business has started, and this profit, the ratio of this profit is to be shared by each partner once the profit is declared whenever they think that they should distribute the profit. Then there is another investment mode of financing that is called as mudaraba is also a kind of partnership, but in this case, if there are two partners, so one partner come up with their investment and the other will provide its managerial facility, or he will actively participate in the management and activities of the business. The profit is also being identified, and the ratio of the profit is being determined before the business, before you start operation, and this profit is shared according to that ratio. But in this case, because one party is coming with their investment, so the loss is actually shared by the person who has made investment. But there are certain things like it should be make it sure that the person who has doing the business, or actually providing the managerial facilities, he is actually acting in the best interest of the business. So in that case, the profit the losses are shared by the person who has made investment in the business. Then the third mode of financing is actually a participation term certificate. Participation term certificate is actually a replacement of bonds and debentures, because when you are a corporation type of business, and you are running business, and you need certain type of finance. So in that case, if you don't want to indulge in conventional bonds or any other kind of activity which is actually related to riba, or in which there are chances of interest is involved, so what you'll do is you will issue participation term certificate. These are the certificates which can be issued for a period long, almost more 10 years, for 10 years, and these are the certificates which can replace debentures and bonds. And on this, these are actually tied to the profit associated with certain assets. And this and once that asset has generated certain cash flows, so profit is being shared by the participation term certificate holders. Another investment mode of financing is equity bear participation. Actually, equity participation are just like shares, which is because you want to you want to increase your investors. So in that case, you can issue different shares, and based upon that, you will provide dividend to your shareholders. Then the last one is your rent sharing. Actually, rent sharing is another mode of finance which is adopted by financial institution in Pakistan. And according to this, the financial institution provide part of the finance for the construction of house. The client and the financial institution share in the presumptive rent of the house. Since maintenance and taxes are to be paid by the client, a suitable allowance is given to him in share of the rent. Similarly, the financial institution share is adjusted upwards to provide for administrative expenses. But all legal charges are paid by the client, and the house remains mortgaged until the financial institution receive back all the amount of money which is due to it. So this is another investment mode of financing being used in Islamic banking. What is a participation term certificate? As we have discussed, that there are these are the certificate which can replace debenture and bonds. So we have two type of participation certificate. One is your short-term participation certificate. These are actually issued by the companies, and the private limited company, the public limited companies, and these are the companies which needs finance, like to finance their short-term needs, like their working capital needs, purchase of the more raw material, or payment of certain short-term expenses, and all those things. So these certificate can be utilized. It can replace commercial papers. So this short-term participation certificate can be used for fulfilling the short-term needs of the company. Second one is long-term participation certificate. These are also issued by the companies, and they are actually utilized to meet the long-term needs, like expansion of the company, or making capital expenditure, and all, and many other long-term needs. It actually helps to replace the debenture and bonds financing, because in that case interest is involved. So these participations and term certificate can be used to replace the debentures and bonds, and the main return on these participation certificate is return on asset which are linked to profitability. Like we the arrangement is that these participation certificates are linked to certain asset, and the profit associated with that assets are are distributed among the participation term certificate holders. Now, as we have discussed, that musharaka is an arrangement in which, like partnership kind of arrangement, in which there would be equal participation of the capital between the partners. When we are using this musharaka financing in Islamic banking, the arrangement is that there is equal participation of capital by the bank and by the lender. Both parties come up with their financing, and the profit and losses are shared as pre-agreed amount. there would be an agreement between bank and the person who is lending the money, and the profit and losses are, and what would be their share would be agreed. It can be used for short-term financing, and the bank will provide you overdraft facility. As we have discussed, that overdraft facility is actually a facility in which you already have a bank account in the business, in the bank, and they will provide you a certain limit or a cash line up to which you can take out a certain amount of money, and interest would be charged on your daily ending balances. Then the bank can also participate in the management because they are the equal partner of the business. So they would be the partners of your business, and they have equal right to take part in the management and management of different activities of the business. And the security is also very important. Now, another form of Islamic banking is mudareba. Actually, mudareba is a contract, or it is the form of partnership between the one who contributes capital, that is called as Rabbul Mal. In this case, the bank would be the Rabbul Mal because they will participate in the business by providing money, and the other who contributes effort in the form of managerial skill, that who will be called as mudarib. Profit from the outcome of the venture is shared between the capital provider and the manager according to the agreed profit sharing ratio. While when we talk about losses, so losses are only borne by the capital provider. In this case, the bank would be bearing all the losses, but it should be make it the thing should be considered is that loss is not due to the mudarib negligence or violation of specified terms and conditions. There are certain aspects or certain requirement for mudariba contract. First of all, registration is very important because you have to register your business, and based upon that you will be getting the financing from the business in a form of the partnership of the business. This type of mudaribas will be helpful in resource mobilization because we have many people who have skill, who have entrepreneurial skill, and they can do very better in the business field, but they are in short of business financing. So this kind of mudaraba arrangement would be helpful in resource mobilization of the country, which will be valuable for the growth of the economy. And then another aspect is that while the business is operating, and the bank is the equal participant or the of the business or partner of the business, so it's very important that they should go they should watch and see the operation of the business, and as they are they are done being according to the prescribed arrangement, or they are being done according to the market trends and all the other activities. So bank has the responsibility, or you can say they have a right to see the operation of the business. Then the promoters who have acquired funds from you and they want to invest in the business, it's very important that they should be knowledgeable. You have to make it confirm in case of bank, because bank is doing their business and they have to perform their risk management practices. So they should make it confirm that the person who is acquiring fund, like promoters, they should have enough knowledge, and they should have a capability and skills to operate the business and to do the business in the best interest of the company. Now, there are different types of mudaribas. Like first of all, we can say the al-mudariba al-muqaida. It is actually called as restricted mudariba. In this case, the bulmal, which is actually providing finances to the promoters, may specify a particular business or particular place for the mudarib, in which case he shall invest the money in that particular business or place. This is called as al mudariba al muqaida, because the Rabbul Mal have has restricted you to invest in certain type of business or in certain place. The other type of mudariba is al mudariba al mutalika, which is actually opposite to the restricted mudariba. It is actually unrestricted mudariba, and Rabbul Mal give full freedom to the mudarib to undertake wherever business he deems fit. That is called actually they are called as mudariba al mutalika. However, he is not authorized to keep another mudarib or a partner or mix his own investment in that particular mudariba without the consent of Rabbul Mal. Another important thing is that Mudariba can only be used for public limited companies. It should not be used in a private sector company. And then another thing is that when you are starting a Mudariba business, so for in that kind of arrangement, you will have to start a separate business. You cannot take Mudariba money, or you are not take Mudariba from a bank and invest into your previously business. So you have to start a separate business in which you have to participate, or you have to make a bank as your partner or as a Rabbil Mal. And last thing is that there should be a religious board who see all the activities of the company, and all the activities in whether they are according to Sharia or not. And then and then these mudarabas or other kind of businesses would be allowed to operate. Now, Ijara, it is actually Islamic leasing, and this is actually a long-term method of interest-free financing. Like when you want to buy an asset, you can use this type of financing. And asset owner, called the lessor, confirms the right of asset to the leasee. The leasee is a person who will be using the asset, and the owner of the asset would be the leaser. It is for a specified period of time. The leasee only gets the use to use asset against the payment for a duration of the contract. The leasee is responsible for maintenance and insurance of the asset which is being used, and the period of lease usually ranges from 5 to 20 years. There is a difference between the conventional lease and the Islamic lease. The major difference between the ijara and the conventional lease is that the installments of the lease contract will start when in ijara start when you have when the leasee has asset in his hand. But in case of the conventional lease, this kind of this kind of thing is not determined. The installments can be start once the contract has been arranged, and whether the leasee has the asset in hand or not, it is not being identified in lease contracts, in conventional lease contracts.